The stock market has put investors on a roller coaster ride in 2025, driven by macroeconomic policy and geopolitical tensions. I expect the rest of this year will be more of the same, more volatility for stock market investors. Given that backdrop, what's the 9 best stocks to buy right now? Well, I'm going to reveal my 9 best stocks to buy right now in July of 2025 and beyond. And I'm also going to share with you how my portfolio of stock picks has performed year to date here in 2025. Let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So, the 9 best stocks to buy right now, according to my research and my calculations, are the same as they've been since the start of 2025 for me. I haven't made any changes to my list of 9 best stocks to buy right now because the majority of the reasons and factors why I like the stocks to begin 2025 remain in place right now in the middle of the year. Let me share them with you here. NVDA. NVIDIA stock is up over 17% year to date in 2025, and the tailwind pushing NVIDIA forward remains today, if not more robust than where it was to begin 2025, right? The artificial intelligence industry continues to invest hundreds of billions of dollars to develop these capabilities, and NVIDIA is fueling all of that growth. What's more, we're getting more and more data of the next catalyst for NVIDIA. Artificial intelligence will likely drive NVIDIA's growth for at least the next 2 years, but NVIDIA also is determining the next catalyst, which will come from driverless car technology and other categories that will boost NVIDIA's growth beyond the current growth drivers, which include the data centers optimized for AI. AMD, meanwhile, is also up over 17% year to date in 2025. Let me share with you the rest of the 9 best stocks to buy. They include NVIDIA, AMD, Oracle, which got some great news this morning on an announcement of $30 billion in deals for its products and services. Oracle stock is already up over 31% year to date in 2025. I'll bet very few of you heard a recommendation for Oracle stock as one of the best stocks to buy in 2025. I recommended this in early January. Eli Lilly has so far underperformed. It's up only 1% year to date in 2025. But of course, demand for its weight loss drugs and the pipeline looks robust going forward. DraftKings stock, the e-gaming and online gaming company, is up over 15% year to date in 2025, and its prospects look robust going forward as well. It offers a huge convenience advantage for folks wanting to conduct gaming. Folks that want to game, instead of driving to a local casino, you can open the app and start gaming almost instantaneously. Also, it's removing transactions that were previously going towards the black market, right? Illegal sports betting is prevalent in many of the cities and states in the United States. By states approving DraftKings to operate in their local jurisdictions, they're taking transactions that were formerly going towards the black market, bringing them towards public markets and generating tax revenue. And we all know how much politicians love to generate tax revenue. That will never change. It's been that way for all of eternity, and I expect it will be that way for continuing the rest of eternity going forward. Amazon stock is flat. Of course, Amazon faces significant risks because of the increases in tariffs. The large percentage of products sold on Amazon's website in the United States are sourced from outside of the United States, and even larger percentage concentrated from sourcing from China, which faces the highest tariffs. That's why Amazon stock is underperforming year to date in 2025. But given Amazon's diversified business, I expect they'll be able to weather the storm and generate a relatively strong response, even though that the tariffs are going to impact the company's profitability in the near term. Alphabet stock is down almost 7%. It's the only stock that I recommended in the best 9 stocks to buy in 2025 that's down. The rest of them are either up or flat. Alphabet, of course, taking the big risk the rising effectiveness of artificial intelligence, consumer search behavior switching to large language models, and that's increasing the risk to Alphabet stock. But I think those risks, I think the valuation decline due to those risks are overdone. I like Alphabet's prospects long term. It has its own large language model. It's incorporating artificial intelligence into its own business. So while it may lose, and it's likely to lose market share in Google search, I think that risk is overdone, and I think the business will recover some of those losses in the other parts of its business. Pinterest is another stock I recommended. It's up over 23% year to date in 2025. It's one of the social media companies that's generating growth from the United States and Canada, the most lucrative region for social media companies. And I like the user generated content business model. Pinterest doesn't pay for the content on the platform. It's created by people like me, and Pinterest just shows advertisements on the platform and benefits from user generated content. I really like that business model. I have several of the companies in that category rated as a buy, with Pinterest being the best one. And last but not least, Uber. In fact, Uber is rated as the best. I rated Uber as the best stock to buy in 2025, and it's performing the best out of the best. It's the best of the best. It's up over 54% in 2025. This was a relatively, I don't want to say easy, but I liked the opportunity that presented itself to begin 2025. People got a little too excited with Tesla. And of course, Tesla likes to overpromise and underdeliver. And all of those promises from Tesla about what it's going to do with driverless car technology drove Uber's stock price down to levels that I don't think it should have ever gone down to. I scooped up Uber shares for my own portfolio and recommended it as the best stock to buy in 2025. Hopefully you capitalized on that and you added some Uber to your own portfolios. I still like Uber's prospects, as we've seen with Tesla's rollout of the robo-taxi in Texas. It's not working as well as they anticipated it would. It's already making plenty of mistakes, and it's in a highly concentrated geofenced area that Tesla had been preparing and collecting data on for months, and it's still making plenty of mistakes. Imagine when they roll it out, if they try to roll it out into other cities without that kind of preparation and without that kind of geofencing. And one of the main uh, selling points for Tesla's technology is that it doesn't need to geofence because it's using a camera-only technology. I think all of that was a lot of hype and overpromising. I liked Uber stock here. So out of these, for my own portfolio, I own Uber, Google, and NVDA so far, right? I'm looking to add some of the others to my portfolio, but so far I already own Uber. I bought NVIDIA stock earlier this year. I'm up significant percentages in Uber and NVIDIA. I'm up a lot more in Alphabet because I bought Alphabet stock back in 2020. So I still like Alphabet stock even today, but I bought it first in 2020. Overall, my total portfolio year to date in 2025, if you had bought these 9 stocks to start the year and just held them to today, you would be up over 17%, 17.12% to be precise. The S&P 500 index is up over 5.4%. 5.42% to be precise. So comparing my portfolio with the S&P 500 index, you would have generated over 3 times better returns with my 9 stocks versus the S&P 500 index. So I've significantly underperformed so far year to date in 2025. But as I always say, now I outperformed in 2023. I put out a video for my year to date performance in 2023. I put out a video for my 2024 performance, which I also outperformed the S&P 500 index in 2024. And so far, I'm outperforming the S&P 500 index in 2025. But all that being said, it doesn't mean that the rest of the year I will outperform the S&P 500 index or even next month. Things can turn sour, and these picks can turn sour, and my performance can be significantly worse than the S&P 500 index. I don't expect to outperform the S&P 500 index by this large a magnitude for any extended period of time. This is way, way, way too good of a performance to expect this to continue for any long-term period of time, right? To outperform the S&P 500 index by over 3x, it's extremely rare and unfortunate to have this kind of return, but I don't expect this kind of return to persist, right? I understand that this is a type of situation where things worked out in my favor this year. Uber was an especially rare opportunity. I don't know if that kind of opportunity will present itself again. I was grateful that it did present itself and I capitalized, but I don't know if that kind of opportunity will present itself. I don't know. Investors get excited sometimes about Tesla, and maybe they will again, and you'll have another opportunity with Uber. But I follow a process for investing in stocks, right? I actually wrote a book about it, a 6-step framework for evaluating stocks. And I follow my framework, and it's not always right, but it points me to the right direction a lot of times, and it helps me avoid a lot of disasters. I've avoided nearly the entire electric vehicle industry over the last 4 or 5 years, and you're probably aware many of those stocks are down over 90%. Tesla is still down from those highs in 2021. Many of those companies went bankrupt. My 6-step framework helped me avoid the entire electric vehicle industry. And if you were watching my videos, I warned investors to avoid many of those stocks because the framework pointed to those factors, those businesses were not attractive businesses. Investors got too excited about these results and led them to pay these super high valuations to get those types of returns that were overly optimistic. So you can get my book today at parkevtatavosian.com. There's a link in the description if you want to follow and learn from the same 6-step framework that I'm using to pick the stocks that I'm buying. But I would always recommend you do your own due diligence, conduct your own research. Don't take this result and say, oh, Parkev knows what he's doing. I don't need to do my own research. I can just follow whatever Parkev picks and I will have great returns for the rest of my life. That's not going to be the case. I don't expect to outperform the S&P 500 index by this magnitude, as I've been saying repeatedly for the last couple of years. The last few years have been better than expected, and I expect a mean reversion on my portfolio of stocks over the next few years. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.